How's it going, guys? It's Forensic Forex with Deontay. Another Forex Fridays. I apologize for last Friday. Something was wrong with the file. It just didn't adhere to YouTube. It's going to be brief because I have other things and other obligations to do with family later tonight. But all in all, I hope everyone and your loved ones are safe. Hope you guys are healthy. Hope they're healthy as well. Hope you guys played it safe this week, NFP week. I normally play it chill. Less stress on me to trade. Why trade a week where I know the well-anticipated Friday event is going to be probably really exacerbated? But all in all, when it comes to this channel and it comes to Forex Fridays, I like to bring us back to fundamentals of the market, and we always bring it to the weekly range review. We like to look at Monday through Friday for anybody that's new joining us tonight. That's what I normally do. So we look at the market from Sunday to Friday, and the weekly opening price is always going to be fair value. Now, why is this fair value? Because it's the start of the week. That's the simplest things I can tell you. It is the start of the week. That's why it's fair value. You're not paying a premium and you're not paying a discount. However, when price gets above it, that's when you start getting into overbought territory. When price gets below it, that's when you start to go into oversold territory. High probability buy scenarios, high probability sell scenarios form above, high probability buy scenarios form below. We can see Sunday to Friday, whenever price took out a previous daily low. So we can see Wednesday was the low of the week. So we're going to start picking at this chart here. So we're just going to leave this here as Wednesday. We can see Wednesday is the low of the week. It comes out, comes down, and takes out Tuesday's low right here. Now, what's occurring here when price takes out that low? It's taking sell side liquidity. It's taking out a previous daily low. Now that is significant. Now why is that significant? Because you know the market makers are always buying and selling at the same time. But whenever it comes to buying anything in the marketplace, it is always ideal to do it after breaking a low. That is just common sense. If you're going to look to buy, you're going to buy after breaking out the previous daily low. What's below this low? Sell side liquidity. After taking out this low, we could see it consolidates, waits till NFP, runs up, really doesn't give a big running back to weekly open. But when we look at like EU, GU, AU, you're going to see the difference. But you could see what happens here. Large funds, commercial speculators come in and buy this cheap. Why are they buying it cheap, Deontay? Because we're below the weekly open, we're breaking a previous daily low, and we're below midnight opening price. This price point here, midnight opening price, is the same ideology that I'm showing you here, but it's a fractal ideology. It's just shown intraday in a specific day. That is 12 a.m. midnight opening price. If I were to go down on the 15-minute time frame, we're going to see more detail. So if you go down here, you go down to the 15-minute time frame, and you could see multiple times where price comes below this price point here. Let me get it proper for you guys. Multiple times it comes below the opening price, 12 a.m., and it's being brought up by the commercial speculators. You can see their final give here was after taking out the previous daily low, and after that they run price higher. When is this occurring as well? Because you know it's time and price. It's not that the market is doing this at random times. It's time and price. What time of day is this? This is New York session, the early AM session here. You put on the indicator, you're going to see here, New York session. This pull down happens during the London close right here. So we get a high probability reversal. So price comes down and runs right back up. And ever since then, giving us that low of the week, because technically this is the low of the week here. That is a London close reversal, 10 a.m. to 12. That was the start of the market makers buying price and turning it around for the rest of the week. If we were to play it out, it all started with this London close taking out the previous daily low and then running price back up for the rest of the week. So that's what that would look like there. Now, many people would say, how would I find a buy setup here, Deontay? There are many ways you can look at it. you can look to be a buyer after taking out the previous daily low, which is very aggressive normally. To me, I think that is an aggressive buy because you don't have the ultimate confidence or confirmation that price is going to come out, take this, and go higher. Because people can sit here and argue to me and say, well, Deontay, what if it breaks this, retests, and then goes lower? Or just breaks it and then just continues breaking down, just like it did on Monday when Tuesday did it. So if you see on the previous daily range, this is Tuesday's range, we can see Tuesday takes out Monday's low. Why did we not get a rally here, Deontay? Right? People can argue that. You said buy after breaking a previous daily low. Instead, price just came back, retested the low, and fell lower. Because we know odds are, if it's going to make the low of the week, it's going to form on 2 days primarily. It's normally going to be Tuesday, and it's normally going to be Wednesday. Those are the 2 days that we're going to normally look for price to turn around for the weekly range or the weekly candle expansion. You can see from Monday, it drops down with speed, so you know it's trying to get somewhere. Look at the range for Monday. It's not consolidating. That typical Monday consolidation that we normally get and we try to avoid doesn't happen here. What happens at the beginning of the week? They show their hand. They want price to go lower quick. Why? They want it cheap. They don't want it to be in a premium above Sunday's opening price. They quickly run it out. Look how London literally looks like it's dropping in a straight line. It just drops, consolidates, and just turns around quickly. New York does the same thing. No actual trade entry, no New York retracement, then continuation. Little small price action. Runs up, then just drops. Consolidates through. Tuesday finally runs through the Asian session low here. Doesn't come back higher while being in a discount. That happens. But what is this? This is just a down day, which is a potential counter trend candle. If you're looking to be a buyer, that means you know tomorrow for sure you have more speculation it's going to run higher, and you buy below where. If you're going to be a buyer any day, doesn't matter what day. Let's say you're going to the marketplace with no bias. It's just an idea and a concept. Where would you buy? Cheap. You want to buy cheap, below midnight opening price. And vice versa. If you're going to sell on any given day, let's say you don't have any bias in the marketplace, but tomorrow you just happen to come to the conclusion that you want to sell tomorrow, where are you going to sell? Above midnight opening price. Look at Tuesday. Where does Tuesday find its sponsorship for selling? Now I know it sounds redundant, but it's foundation for people that may not know. There's other people in the chat that probably know this, but it's key to always refer to this. Midnight opening price. Zoom in closer. I want to make sure it's correct. Yes, a down close candle. That's the opening price here. Price opens, runs above midnight opening price into a premium. Why are they running it into a premium? Because they want to have the highest probability of selling at higher prices. The commercial speculators don't want to ideally sell below this line. Who sells at a discount? If you were running a business, would you sell your products at a discount? No. You're selling it at some type of premium. You're going to fool the public, though. Think about this as well. You're going to fool the public, though, that you're selling it at a discount. Yeah, me as the consumer, I walk into the store and it's like, oh, the clearance rack, right? They're selling me this t-shirt for $10 off. So in the eyes of me buying it, I think that they're probably taking a loss. No. The CEO, the businessman, or the businesswoman, they brought this t-shirt on pennies of a dollar. And if they drop it down lower, it just entices me to buy it lower, right? So what happens? People either are going to buy price in a discount, only to be met with selling only. And price runs their stops. And that's what's happening here in the marketplace. That's the sponsorship. Look how it gets close back here. An actual trade entry New York session here. Pulls back up. If I were to show it with the fib, it would look like this. If you take the most recent swing high, swing low, break that range in half, you have 50% of this range, high to low. During what time of day does it get back into a premium for this range? Right here, actual trade entry. Because if you know it's going lower, odds are it may not come back above midnight opening price. They're not going to allow you to get the high sell. Yes, there are times it might come back here in New York and run out the London high. right? You get that run back up here. New York runs out the London high, and then it drops lower. That's not going to be an everyday case scenario. But if you need to find that sell setup in New York, you just wait for the pullback, and you find the actual trade entry. If you were to use the wick, high to low, because I know some people are going to argue, why don't you use the bodies? You can. If you're looking for the precision of entries, I would say use the bodies, just as ICT recommended many traders to do. If you take the fib, and we were just to do the body, let's say body here and lowest body here, where's actual trade entry? 62% to 79% retracement, almost perfect. I'll draw the box too, so that we can see it. Here to here, that's actual trade entry. That blue box there, I'll make it orange. That shaded area there, actual trade entry. Ever since hitting that, price goes lower. Now, many people ask me, well, is there a New York session? I'm trying to answer multiple questions since I only have 1 hour. A lot of people ask me, Deontay, we know the Asian session model, for those that know it. Is there a New York session model? Yes, there is. And many people are now becoming fond to it. The ICT silver bullet or no bias model. It's the same thing. You look at the New York session. You find the opening, right? You find any swing high that is formed or any swing low that is formed prior to the New York session. You wait for it to be broken. Okay. So let's say we're looking at price here. Take off the indicator. You're looking at price here before it gets into 7 a.m. And I want to get it right at 7. Oh, it is at 7. Okay. Right at 7 a.m. Stop it. Here. This is at 7. This is the opening price of the New York session. That's 7 a.m. Now think about it. If that's the opening price, the same idea as follow suits here. Anything above this price point is a premium. Anything below is a discount. So if you're looking to sell in the New York session, it better be above 7 a.m. It's just the best possible sell for you. You want to put yourself in the best possible position. Why are you going to sell below here? You're only cheating yourself as the trader. Wait for price to get above 7 a.m. and then find your sell opportunity. Now, you can take many approaches to it because many people may not have formulated a model themselves. You can wait for price to get above a 15-minute swing high, then go short. You could wait for a price to get above a 15-minute swing high, scale down to the 1-minute time frame, or the 2-minute, or the 3-minute, or even the second time frame, find a fair value gap, any fair value gap, and go short. It's the same idea. Doesn't matter. I'm showing it using the dollar index. I could show it in using the currencies as well. Mark out a swing high. Magnet tool here. That's a swing high broken here. We also have another one here. And we'll make them blue. Sorry, make them red for the highs. What's above these highs? Because I know a lot of people are visual learners. Dollar signs. Buy side liquidity is above these highs. You're going into the New York session. You're now above 7 a.m. opening price. You have the idea that price is going to come lower. You see the sponsorship down. You see London has already started to tear off. You expect probably New York session to give a reversal. A retracement. Sorry, not reversal. Retracement, then continuation lower. Price runs up. Takes out a 15-minute swing high. Can you look to go short here? Yes. Price comes there again. Could you look to go short there as well? Yes. Those are opportunities for you to get in the marketplace short. You're not shorting just because you see price going up. You're shorting after the break of a high. Like I said, vice versa. The commercials like to buy after breaking lows. The commercials like to sell after breaking highs. It is only logic. You can't make this stuff up. Somewhere along the lines here, after breaking this high, there's either going to be some type of mitigation block here, right? Coming up, selling fast, and then price trading down into it. Or a fair value gap. Let's scale down to the lower time frame to see what we have here. Wow, bingo. I could already see it. I don't even have to look at it. Here. There you go. Price comes down, runs it. It's not like I was watching this on Tuesday and I knew what dollar specifically did here on the 5-minute time frame. But just reading price action and doing it for a while, you see these things constantly over and over. Look how price runs up above the 15-minute swing highs, really fast. And what happens? Market makers do what? They sponsor the sells because of the range. You have that high and you have that low. Cut that range in half going into New York. You're in a premium for this leg here. And they sell. That's the actual trade entry here. But let's say you didn't see it from the perspective of using a fib tool. High to low, wait for OTE, 62% retracement, go short, stop loss above the high here. Let's say you didn't see it like that. You could look at it this way. I'm showing you so many different ways of looking at the marketplace right now. Price comes down, runs up quickly, and then runs that low that it left. Runs back into it and says goodbye. Where is this all happening again? Above 7 a.m. opening price. It's like clockwork, guys. It repeats. This phenomenon repeats every day. Yes, there are going to be times in the marketplace where you'll see it goes short, but it doesn't even, let's say it opens and it just drops. Yeah, you're going to have days like that. When the daily candle opens, doesn't move above midnight opening price, it just opens, drops. And you don't get no premium sell. That could happen for the sessions as well. Price can open and it just drops. You'll see that time and time again with the Asian session sometimes when it's trending, or even the London session. It just opens and it drops. For example, because I know it happened on Monday. See the London session. This doesn't really give you a nice clean Judas swing on Monday. You know? Everybody's looking for that characteristic for the London session to give that fake move up, lower the retail traders to the slaughterhouse, right? Lower the sheep to the wrong side, and then drop price. What happens for this London session? Doesn't do it. Hardly does it. Doesn't give the most obvious pull up and then drop down. What does it do here? Just then drops. There's moments in time when you have to live with that. And some people will get upset with this. But can you find a way to get into this market long? Yes. Wait for a fair value gap. Wait for a pullback. Wait for a lower swing high formation to form. Go short on the third candle on the formation. That's some real lower time frame scalping skills. I don't know most people that can do that. But you wait for a lower swing high and then you go short. What happens here? After price breaks this swing low here. Breaks the swing low. Isn't that forming a lower swing high? 1, 2, 3. That's the third candle in that swing high. I may be going a little fast, but I'll slow it down. If price broke a swing low after breaking a swing high, right? So price comes up, breaks all these swing highs. We know these are 15-minute swing highs. These are lower time frame 5-minute swing highs. Price comes down and breaks out this swing low after breaking swing highs. You have a market shift going on here, right? A market break going on. You even have the fair value gap. Wow, just looking at it now. You even have the fair value gap here with speed through a swing low. Do you guys see that? Look how price comes down through a swing low. That is an ideal fair value gap that I would personally look for to go short in. So yes, you may have this PD array here. Yes, the mitigation. Okay, you got the mitigation block. But let's say you didn't see that. Let's say you saw this here. Speed running through, fair value gap running through the swing low. What do? You wait for price to tap into it, go short, stop loss above the candle that starts the fair value gap. And if you're not comfortable with that, then I would say stop loss above the most recent swing high you have in price. Because if price is selling, they're most likely protecting the swing highs from being broken. And then they're rating all the swing lows. All these swing lows here. It's all fractal ideas. All these swing lows are going to get swept. Because they're now in the mindset of selling. Easy targets. Money's below here, money's below here. It's a swing low. It's not a random box that I'm saying, oh, retail logic would say, I think it's going to run to this zone. No, I know for sure that if it's going to sell off, it's going to run to that swing low and that swing low. It's not going to be me. You're never going to see me drawing a box like this saying, oh, I think my TP is going to be in this area. No, I know my TP specifically is going to be around this level, 101.80. I'll round it, right? I'll go 101.80 would be my TP area because it's the most algorithmic level closest to this swing low. I would round it. and that would be my TP on the downside. But most people, most retail traders will say, I'm just gonna average a range that they randomly drew on their box, with a box on their screen. Doesn't make sense. It's nonsense. I want you guys to understand that is nonsense. What does price do? Trades into that fair value gap. Look how it runs into it, runs out of it. I just showed you 3 different ways how you could potentially caught this short. Now, that's not to say you knew that setup was going to form. But if you know, looking back in time, using past data, hindsight will help you understand future experiences that may unfold. Me showing you this example one day is going to show up again. I guarantee it. The same example that I'm showing you here may not show on the 5-minute again, but it may show on the 30-minute instead. It may show on the 1 hour. It may even show on the daily. The same exact example that I'm showing you here will form sometime again. It's like you have deja vu. You know, you ever watch the market and be like, yo, I've seen this before. And you could read it like a book, and then you call it play by play, step by step. And you're like, wow. Yes, because you have the muscle memory of seeing that price action flow over and over and over again. And you just get better over time. Over time, you start to read the markets better. And you start calling things like this on a lower time frame. 10, 15 pips, I'm out. 20 pips, I'm out. 30 pips, I'm out. And even more as the higher time frames go up. But that's how you read price action. These swing highs and swing lows are very important. Once you have the fundamentals of understanding that the markets chase interest rates and swing highs and swing lows, that's all this market is made out of. Swing highs, swing lows, and specifically happening during a specific time of day. Monday, Tuesday, Wednesday are normally your ideal days to trade. Everybody else that's trading Thursday, Friday, they may have a harder time because it might be the back end of the weekly candle, the turning point where price makes a pullback to the weekly candle. That's why a lot of people lose profits at the end of the week. If you haven't realized that, or if you yourself have ever experienced that, because I have, you make profit Tuesday, Wednesday, and then Thursday, Friday, you give up all your gains. Because what happens after Tuesday, Thursday, after me finding short opportunities, the market does what? It pulls back up at the end of the week. Yes, there are times where the market just continues dropping throughout the whole week. But there are more times than not, markets turning back around on Thursdays and Fridays. I know that for sure, trading the market for a couple of years now. And then you give back all your profits, but going into the weekend upset, right? Or either you lost 10% of your account or 5%, which is pretty hefty because you wanted to get greedy because this wasn't enough for you and this short wasn't enough for you. And you wanted to go short again Thursday and Friday, and you give up all your profits. That's not what disciplined traders do. I'm just going to bring it back now to the hourly so we can just finish it off, the DXY. So bring it back to NFP. You can see NFP here. And really choppy day. Seek and destroy. Wasn't really much. You see how it takes out. Look how it takes out the previous daily high. And then even it comes back down. And it takes out the stated low in New York session. Knocks both buyers and seller out. So there's a lot of people that like to say, oh, I twin trade NFP days. And I don't solely agree with that. I don't twin trade. If I were to trade NFP, right, I would pick one side. I'm not trying to play both sides. It's not Russian roulette here. I'm not going to try and pull the trigger and think the bullet's going to be the next one that hits. No, I'm going to play one side of the market, and that's it. I'm either going to buy for NFP or I'm going to sell for NFP. People are putting buy stops and sell stops trying to hedge the market. You see how the market takes both players out here? Waste of time. Why not just leave this whole day alone? Or why not just leave the whole week alone and trade next week? But no, human beings are very emotional, and human beings like money. We come to the conclusion that money is the only thing that matters in this world. And it's very unfortunate. Moving on to AU. So this is a well more structured week. I like this week. Starting off, you can see how it's inverse the dollar. Look how they quickly for Monday, we don't get that classic Monday consolidation that everybody normally sees. Quickly out the gate, Monday, we're straight up. Gives nobody an opportunity to catch the long, let's say, right? Look at the idea. Price comes below midnight opening price. They sponsor the buy here, right here. They could have took out Sunday's low. Technically, if we're looking at this as a day, quote unquote, it could have took out Sunday's low, then ran higher, but it didn't do that. It went to below the midnight opening price and then ran higher. Ever since then, we're in a premium for the week. Notice how we're selling off while being above the weekly open. Ideal sell scenarios. This is not going to be an every week thing because there are going to be times when price is in a premium and it keeps buying up, right? They keep reaccumulating it and then pushing price higher, forcing everybody to buy at higher prices. It happens. But ideally, when I'm looking at this market and then cutting this range in half or cutting the market in half from Sunday to Friday, Deontay is only looking for sells when I'm up here. Is there scenarios where I think I can find buys? Yes. There are some times where I will seek a buy opportunity above the weekly open. But generally, in my trading model, I stick to the same basis. This is sell. This is buy. That's it. For Tuesday, we can see the same idea. Price runs up above midnight opening price and sells off. Wednesday, look at this example. Look at how it doesn't. This is what I was trying to say. Look at how it never runs above midnight opening price here. According to at least this 1 hour chart that we're looking at. Does not get above. It opens and immediately drops. Doesn't give anybody the chance to get the premium sell for the day. Those are moments you're going to have to live with. It's hard to it's a hard pill to swallow. Some people are like, why can't I catch that? Sometimes there are things you're not meant to catch. But I know you could have surely caught this setup here. What's this? A New York reversal. Short-term reversal right here. Right? Comes down below the weekly open. We're below Sunday's opening price. And we're below midnight opening price at that point in time. What happens here? I showed it in the channel. We took out a 15-minute swing low in the New York session. And the model follows suit. The same idea that I showed you on the DXY is forming right here as well. Go down to the 15-minute time frame. Put on the session. Right here. This is just prior to New York opening. And you have your concepts here. The ideology is still here. The fundamentals of what the marketplace likes to do. This dashed line is Sunday's opening price. Discount. You are very oversold. There's no need for any indicator to tell you that. You know that. Just based off this logic here and this logic here, you're oversold. What session's about to form here? New York session. What did we also do here? We took out the previous. Think about it, because everybody is so quick to think otherwise. What did we do here? We took out the previous daily low. Price continues getting cheaper, and we're cheap for the entire week now. What are market makers going to most likely do after taking out the previous daily low, which has sell side liquidity below it? They're probably going to turn it back around. Now, do we know if they're going to turn it back around so that it runs back up to take out the previous daily high? We may not know that. But we can speculate some type of trade idea from this break of a previous daily low that is significant, and price then getting into the New York session and then potentially giving us a turning point. What is this? A 15-minute swing low. That is the most recent 15-minute swing low that we have prior to going to the New York session. What happens going into it? Rerun it. It's the same thing I showed with the Asian session model. Runs down, takes out the 15-minute swing low. I could look now to be a buyer here. What's probably forming here on the lower time frame? I don't know. Maybe a fair value gap going up. Some type of busy buy side imbalance, sell side inefficiency. Absolutely. Let's check the 5-minute. See what happens. Quick rundown, right? Price runs up, comes down, takes out a low, takes out this low. Right? What could we look for if price comes back above this? A mitigation block or a fair value gap. We'll play it forward to see what happens. See, price comes up, leaves a fair value gap here. It's a balanced price range, BPR. There's a fair value gap going down and a fair value gap going up. Now, I'm not too fond with BPRs, but you'll notice this in time often. You'll see a fair value gap going up and a fair value gap going down. Normally, you're catching a turning point here. Fair value gap going down here on this side and a fair value gap going up on this side. Odds are price is probably going up. Even with the context clues of this. Go down to the 1 minute time frame. All these lows are engineered, and they get ready to run it for what? The New York session. New York opening price. Look at how it blends again. That's 7 a.m. opening price. Everything below it is a discount. Cheap buy. Where do the commercials buy? They buy below 7 a.m. for the New York session. While everybody thinks this probably is a sell-off. And retail does what? They sell. And this is a big hint or big tip that I like to reference or try to refer to myself to keep restraining myself. Retail traders start all the sessions. Commercials end it. The same thing for the daily candle, same thing for the weekly candle, same thing for the monthly candle. Retail traders start the beginning of the month and commercial speculators end the month because they take control. Right? They move price in their intended direction. What is happening here? Retail traders are starting the session. What happens as price goes along the session? Commercials say, oh, I'm not going lower. We're going higher now. And they take control again. Even though they're the ones dropping price. They're the ones dropping price. But what is retail thinking to themselves? Yes, I got the market by its neck. I'm the one moving the marketplace here. And then the commercials come back and say, no, you don't. And they push it back up. After being oversold. You can see multiple confluences here. Discount for the session, discount for the week, and discount, if I could get it up here on the screen, discount for the day. That's midnight opening price. That's Sunday's opening price. That's 7 a.m. opening price. How many more confluences do I need here for me to tell me that I am oversold for the day? I don't need any more. I only need 2. And that was 1, 2, 3. That was 4. 4 confirmations that you were oversold. And price continues to run up for the New York session. So you can see retail. Who ends this session here? Who ends it in profit? Commercials. Now they push price high. Back up. And it all started from what? This purge in liquidity. It all started with that purge right here. This purge in liquidity. But the overall idea was taking out the previous daily low for AU. And that's how you would have played that New York session. If you're using it with no bias, it would be the same thing. But if you were using it with context clues, you would use this, and the session's opening price. You have a great opportunity to find a buy setup. You're only trying to look for high probability setups. I'm not here trying to force setups that I'm unsure about. That's a high probability setup there. I'm not trying to force a setup of when am I going to sell, when am I going to buy. I'm literally defining to you what a buy setup looks like. What I just walked you through was defining a high probability buy setup. Hopefully that makes sense. Let's check the chat to see if anybody said anything. Yep, Andrew, I totally understandable, man. Man, I've gone through that too many times to now know not to fall into bad habits. You know, as you progress and you get more seasoned as a trader, and as you get more seasoned as a human being, as yourself, you start to formulate boundaries. The same thing with your social life. You know what kind of friends you like to hang out with. You don't hang out with those friends. You don't hang out with people that do things like that because it's just not your cup of tea. So you don't hang out with those folks. You don't share common interests, so you don't hang out with those folks. Same thing with your trading. You're better off trading Tuesdays and Wednesdays because you tend to statistically get more profit on Tuesdays and Wednesdays. But some reason when you trade Thursdays and Fridays, you keep losing. Over time, you're going to pick up in your head consciously. You're like, oh, wow, I should stop trading Thursdays and Fridays. It would be more professional of me to stop falling back into bad habits and giving up end of week gains. And we'll play this out. Actually, I'll cut this off like this, so we play out the rest of the week. But ever since price gets above Sunday's opening price, it's all selling from there. Sell, 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 sell. And it kept breaking down. And this is probably going to lead me into my bias on AU, because I've been doing the daily updates on AU for the month. Everybody voted for AU. Some people argue, hey, why are you not doing gold? Why are you not doing GU? I just have a certain way I want to portray it to you guys and keep it organized. I don't want to be tracking 6 pairs for everybody. It's too confusing, and it's too confusing for myself. To sit here and try and track 8 pairs for you guys, overwhelming. If I could track one and show you what it's doing and give you my insight, I think people will find a better understanding of what I'm trying to relate to them. It just makes more sense that way if you're going to like teach it to a public community. Right now, I said that if price broke a swing high, odds are that's going to give you bullish momentum, or it's going to be a false break on price. But in order for you to know if it's a false break on price, you want to see it break the swing high and then break a swing low. That's what we just got here. We broke a swing high, and immediately after breaking that swing high, running into the weekly sell side imbalance, buy side inefficiency, we ran back lower. Now, many people may want to see that on the weekly chart. I'll show you that here. There goes your buy side imbalance right there. I mean, buy side inefficiency here. It's a sell side imbalance. Always get the eyes confused. I'm always saying things backwards. I don't know if I'm dyslexic. Sell side imbalance, buy side inefficiency. Market is not inefficient in filling this buy side coming down so fast. What does it do for this week? It hits it. And you can see that displayed on the daily time frame. It hits that there. And ever since hitting that weekly SIBI, we've been breaking down since. Taking out previous daily low after low after low after low. Currently, we broke a swing low. What does that do to me? That shifts my perspective. So I'm on alert because everybody was expecting a daily update for AU. And I said I'll just do it tonight. AU breaks a swing low. What does Deontay's mindset goes to? I think bearish shift occurring, right? This is a potential turning point, because if we broke a swing high and we were supposed to go higher, this is why you got to think about it critically and think about the market structure and its price action. If price broke this swing high here, 1, 2, 3, that's a swing high formation. There's a lower high on the left and a lower high on the right. After breaking this swing high here with this candle, what should ideally form after breaking it? A higher swing low. Yes, if market structure is going to go higher, we need a higher swing low formation. The same way we were getting it here. This is the lowest swing low we have currently in time. This one here, back on March 10th, 2023. That's a swing low. What happens after this swing low? We have a higher one. 1, 2, 3. That's the higher one here. What happens after that? Another one here. 1, 2, 3. What happens in the near future? It breaks it. Either two things can happen after breaking the swing low. Momentum is going to what? Shift bearish, or it's just a false break. We can clearly see it running this swing low was just a false break, because it gets back up and breaks what? A swing high. So now we're continuing into that trend again. Okay, we're back into bullish idea because we broke a swing high now. But then overall, what happens? We get that breakdown after breaking that swing high. Right back down here. So what does my mind think to me? We have possible bearish momentum coming into play, and market makers want this to go lower. Where could they want this to go lower to? The 20-day low. The IPTA 20-day low. That's the 20-day look back. That's the 20-day low from April 3rd. Now, many people say, why did you not use April 1st? Because it was a weekend. That's why. I can't use the start of the month if it's not an official trading day. So here's the first official trading day for the month. Then I'm looking back. It's not that I'm using April 1st. I'm using whichever first day lies, and it's the first official trading day, April 3rd. Hopefully that clarifies some questions around that as well, because I know some people were asking that in the chat. If price is going to continue to go lower, this is the low we want price to run to. What did we also do? We also ran a lot of retail traders to go long above the monthly opening price. So anything above April 3rd's opening price is premium. We get all the retail traders to buy. And then what do the commercials do? They sell. And they sell where? After breaking the 20-day high. So we broke the 20-day high here, and we're running back lower to potentially take out the 20-day low. Now that's a scenario that's unfolding here. Now if price were to go lower, what can we get here? We could probably get a mitigation block, right? Price is consolidating, runs up fast, runs down, runs back into that consolidation, and then runs us lower to the 20-day low. That is a scenario. That is one scenario. Or if price action is still bullish, run up, come down. This is just another false break. They're doing another false break on everybody. Take out the 20-day low. Now we take it back up this way. But it's a day-to-day thing, a week-to-week thing. And eventually I'm going to have to take a stance and try and catch a swing trade, because normally that's what I do. I try to hold for multiple weeks of the month. So after NFP week, I'm looking for some type of setup that I can hold for multiple weeks until the end of the week and play this to one side. And I would honestly favor buy side because of seasonality. But if the DXY is showing signs that it wants to gain strength and foreign currency is showing signs that it wants to lose strength, because what happened recently to the RBA, the Reserve Bank of Australia, what did they do? They recently kept their rates the same. They didn't increase their interest rates, so they're not increasing their yields. The central bank traders are not chasing the yields now there. They kept the rates the same. And we're just for reference, because I know many people may want to know this. Where is it? Oh, I think it's global rates. It's global rates. If I could find it for you briefly. I know, there it is. Is this it? Yeah, this is the website. So if you ever wanted to know the interest rates of your country, right? Because I live in America, so my central bank is the Feds, right? You would go to central banks. If I could, more information, and it'll give you the whole list displayed like this. So this is where you're taking your macros, because we know if foreign exchange, I don't need no ads. If foreign exchange is based off interest rates and liquidity, and those are the primary drivers of the marketplace, this is important to keep in mind. Feds currently have a 5% rate. What does Australia have? 3.6. Which one is higher? The Feds, clearly. And what was the last decision recently? Did they update it? No, they didn't update it recently. But you can see they didn't do much with their rates. The RBA, they kept it the same. I'm not sure why they didn't update this. This should be changed already. This is late. This is March. The previous change. I think they're late on updating this. But this should have been changed as well already. And then this would have showed you that this would have been 3.6 as well, and then the current rate would still be 3.6 as well. They did nothing. They kept their rates the same. So now that tells me that they're probably going to devalue their currency. So if anybody knows this, central banks do this on purpose. They either increase or decrease their rates, and they devalue and increase value in their currencies. They do that on purpose. All the central banks do that all together, forming this perfect symmetry amongst each other in global trade. I know it goes deeper in that. Not sitting here saying I'm a professional and I have certifications or some type of degree in that kind of thing. But if you have any common sense, you do your own education, even if you're not in school, you still have to learn. You know that interest rates play a direct role. Right now, the Feds have the highest rate. So I think the Feds, the greenback may come back. The dollar may still be champion. Everyone's counting the dollar out. I have at one point in time as well, thinking the dollar is going to crumble. But Time and time again, the dollar has proven itself to be really resilient because of the way it's structured. And that's where I stand right now for AU. So right now, my mindset back on the bearish shift now. I'm on the bearish shift. So right now, Deontay is not bullish on AU. And if I'm not bullish on AU, that would mean I have to be bullish. I can't be bullish on GU, and I can't be bullish on EU, and I can't be bullish on NU. So we'll previously look at that. Look at GU. Now, what happened with GU? We recently took out March's clean IPTA highs here. Right there. Took those highs out, which was a 60-day high. Look back for March. Now going into April, we'll mark out April, and we'll just do the 20-day range just to keep time maximum for you guys. That's the 20-day range. Look back. That's the cast forward. So this is your time period to play around and speculate. 30 days. 20. Every 20 days, the market makers are going to move price to a new liquidity pool and then move it to the other. 20-day cycle. That's one of the cycles of the market. I know that many people may say, oh, there's many other cycles as well. The 90-minute cycle, the 45-minute cycle, the 15-minute cycle. Thank you. I appreciate that. I really do. You have the 20-day high here, and then we also have the 20-day low here. Now, that's where we had that mitigation block when price came down, took out the 20-day lows, faked out all the retail traders to go short, came back up, respected it, traded into the mitigation block, and then ran high. And then cleaned out all these highs here. That's a clean setup. Now, many people will punch the air for this. Many people will be very upset missing this clean setup here. Very clean. Market makers knew exactly what they were looking for here. They knew that there was money here and money here. And whoever was going short here has a stop loss above this. Whoever went short here has a stop loss above this. What do? They run anybody down here briefly, anybody down here briefly that was buying, get them out the buys, and then run the train this way. So you may have had the idea that GU was going to go long, but what does the market like to do? They like to run you out. You may know that it's going up here. What are you going to do? You're going to buy. And they're going to do what? Squeeze you out your long position. Squeeze you out. Stop you perfectly out, and then run it in their intended direction. So you don't get on the right train. They kick you off the train, and they go flying. Happens all the time. Those false breaks get a lot of traders. A lot of traders. Price takes out the 20-day high. Now, at this point, what am I going to be mainly concerned about? If price is going to continue to break down. If we get an up-close candle and then price sells the next day, odds are it's still going short. We've made a new trend change. And what do we currently have here? A smash day candle. Now, this answers somebody's question. Excuse me. Somebody's question about smash day examples. And I'll just reiterate it here. A smash day candle, according to Larry Williams, and if you don't have the book, please ask me, DM me directly, because I'll get you the book for free. Like, literally give you the book. Like, just ask me and I'll give you the book. You don't have to pay for the book. Price comes up here, right? Closes off high. This candle here, to most people, what does it look like? Looks very bullish, right? Looks very bullish. This is how you catch the turning points. This is how you catch the false breaks. It looks very bullish. The most retail traders will come here, open up their chart, and look at this day right here and tell you, oh yeah, GU's going up with very strong conviction, right? They could be right. Not sitting here saying they're wrong. They could be right. But they have very strong conviction that the marketplace is primarily going to keep going up because they see this day closed above all these candles highs. That could just be to entice retail traders to go long. This close above here extremely looks bullish. Extreme bullish. Looks bullish. That's the quotation. It looks bullish. But if price were to ever get back down to its low point, that is probably it turning the corner and leaving you in the dust. Right now, if it was to go short, we all have the opportunity to go short. This is not me telling you to go short. But this is me telling you if the setup was to follow through, this is how Larry Williams would play it out. This is your smash day candle. Why is it a smash day candle? Because if it turns around, it's going to smash all the buyer stops. Anybody that's buying probably has protective stop losses below all these swing lows going up. You could teach a child this stuff. I'm telling you. You could teach a kid this. You could, like, if you have children, you could really teach them how to trade on like these basic fundamentals. If you're gonna sell, you're gonna target swing lows. There you go. How do I know my TPs, Deontay? There you go. You go short here. If price were to turn back around now and get there, here, that's where you're going short on a limit entry, on a sell stop. So you're selling on weakness here. So you go short. How would I play this if I wasn't confident about this? I would if market makers are now turning price down, I'm just going to wait for an up close candle. Now, many people sit here and say, what? That doesn't make any sense. Think about it. If the market makers are going to push price down for the next 3-4 weeks or for the next month, doesn't that mean every up close candle is going to be met with selling? Yes. Here comes the light bulbs turning. Look at this leg up. It's hindsight data. I always point this out, but people always overlook it because they think they need intraday trading, and they don't. And ICT has said this multiple times. Everybody thinks they need to do intraday trading, but they could just find a nice position and hold for 2-3 weeks, 4 weeks, make way more profit. But see this leg up? Look at how many down close candles we have here. We're going to mark it off in an hour. Let's say the turning point was here. Let's say this is the smash day candle here. It's the close below all these lows. This is a smash day candle here. Price gets back to its high. You buy there. Let's say you weren't confident to trust Larry Williams, right? You're like, Larry Williams, you're a good trader. You've been profitable. You showed yourself. You're resilient. I still don't trust the model yet. I don't have enough experience trusting the smash day model. What confluence can you add to it? Just wait for down days after the smash day has already been triggered. Buy here. Buy here. What happens after these two down close candles? Market makers buy it back. They run away from these down close candles. Once again, what did he do here? Down close, they buy it back. Once again, another down close. And this is not even me using certain days. It could be very methodical. Because you can sit here and filter this out. You could say, oh, I specifically want Tuesday and Wednesday to be down. And then I'm going to buy the next day. People don't think critically about this stuff. You can really filter and optimize a trade setup. Down day. What is this? Wednesday. Wednesday. Could this potentially be the low of the week? It could have, but it wasn't. Down day. What happens the next day? They buy it back. Friday. Down day. They buy it back. Right? And could that be the same idea that's still going on here? Yes. Could this still be buying? Could these 3 down close candles still be in buying opportunity up? Right? Buying after this, slowly compounding. I'm not sitting here telling you need to be risking 5% each day because you're going to wipe your account if it fails. But I'm sitting here saying use 0.5%. Compound this day. Small buy position here. Small buy position here. Yes, you're in drawdown. But it's not something that you can lose sleep over because you're risking less than 1%. Here. Buy again. Buy again. Buy again. Buy again. And this whole time you've been compounding. And you made profit on the way up. But at first it feels scary. Because you're like, it's going down, Deontay. Most people that trade, when they see a down day, they're like, I'd rather sell. Yes. But overall, long term, there might be a pullback. And you see that here. Pullback, 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 pullback. But here, we could be turning the corner again with that smash candle. Here. Right here. That idea that this candle is the turning point. If it gets down here to this low, it's gone. It's going to keep going lower now. And if you want even more conviction, you wait for the swing low to be broken. What happens when that swing low is broken? And I posted this in the how does Deontay find his daily bias? I learned it through ICT. It's no different. Even through paid mentorship or the free mentorship, he talks about it all the time. Swing highs and swing lows. Doesn't take much. What's below this swing low? Sell side liquidity. And if they break this, what does the mindset tell you? The mindset should be saying, Oh, snap. We broke a swing low. This could be potential bearish momentum. If it is not a false break, it should create a lower swing high. It should create a lower swing high. That's what it's going to do here. This is the highest swing high. There should be a lower swing high formation forming here after breaking this swing low. Breaks this swing low, comes up, makes that lower swing high there. Now you have more confidence. Yo, I'm playing this short, Deontay. I already know what I'm going to do. I know my game. I know my game plan for the next 2 weeks. Perfect. I'm glad that you found a consistent model. Many people may say, that's malarkey. You know, that's all nonsense that you're talking about, Deontay. Swing highs and swing lows don't control the market. Oh, it doesn't. All right, so let's walk through this theory here. Let's clear the chart. This is the false break. We can clearly see it's hindsight. Hindsight data. Thank you for telling me that. Because everybody, Deontay, you hindsight. Thank you. Boom, here. The idea here would have been what? Let's go short. The idea here, in simple terms, for everybody that's caught up on speed and is comprehending what I'm saying, what happens here? Idea goes, oh, bearish momentum, let's go short. So that means we need to see a lower swing high form. Do we get a lower swing high? Yes or no? We do not. How do we know we don't get a lower swing high? Because price comes up and does not form a lower swing high. Because it comes up and takes out a swing high now. Takes out a swing high. Does not make a lower swing high. It takes out a swing high after taking a swing low. False break. Larry Williams smashed a candle. That's a theory. There's a lot of things, a lot of elements are blending here. It's just that I've been doing it a while now that I can see all these concepts layered on top of each other. Smashed a candle, buy. Right? Now at this point, your mindset switches back to what? Oh, snap. We broke a swing high. Now we're going to start color coding this now so that it makes sense going up now. Swing lows are blue. Swing highs are red. We broke a swing high now. So the mindset goes, oh, instead of it being bearish momentum, we're going to sit here and say, oh, no. Actually, I'm going to change my stance, Deontay. I think it's going to be bullish momentum. And I'll ask the person, oh, why? Oh, because it broke a swing high recently. Oh, perfect. That's a perfect justifiable idea. Because people will sit here and tell me, oh, I'm buying the market. Why are you buying the market? You can't even tell me and define why you're buying. You can't even define and tell me why you're selling. So why are you clicking buy and sell? You're just a risk taker at this point. I'm going to buy, Deontay, because I saw a price broke a swing high. But in further, I'm going to wait for a higher swing low to form after the break here. This is the lower swing low, technically, right? If we're going to get a higher swing low, then that's where the buying should occur. That's where the commercials are repositioning themselves to go long. Right here. That's your higher swing low formation right there. Zoom in for those that I can't see. 1, 2, 3. That's a swing low formation. What makes this a swing low by definition? There's a higher low on the left and a higher low on the right. This candle in itself is the swing low, but the swing low needs its buddies on both sides to make the formation. That's just how it goes. A swing low is nothing without without one candle on the left and one candle on the right. It needs its friends around it to be crowned or considered the swing low formation. It only takes 3 bars. And we're looking at it on the daily time frame, so it only takes 3 days. If the market makers are anytime they're going to turn the market, it's always going to be in 3 bars. Nobody can tell me different. It's not going to be in 2 bars. It's not going to be in 1 bar that they turn it around. No, it's going to be in a 3 bar increment. Always. It's always 3 bars. It's not 5, it's not 6, it's not 8, it's not 10. You don't need 10 candles for a confirmation. Because the commercials are getting money. They're not waiting for 8 bars to say, oh, now we're going to buy. No, they're already buying. These 2 down closed candles guarantee you the commercials and the central bank traders have already started buying. After taking out this swing low. False break, run it back up, they're buying here. What does retail think about these 2 down closed candles? They think sell because it's black and it's down. Even if this was red, they see a red candle down, instantly their mind goes, I'm selling. That's foolish of you. Very foolish. Price creates the swing low. Now, people ask me, how would you go long here, Deontay? Many ways. I'm not sitting here trying to force people into one box. Oh, you need to trade like this. No, you take all these other models and lazy trader approaches that make sense, that it's not retail logic, just as business. Down close days. At this point now, I could just say, oh, any down close days moving forward after this swing low is formed, I can buy. That's one scenario. And I'm literally telling you guys models that you can follow. And this could be that one model you've been looking for to find consistency in the marketplace. It only takes one model to be successful. But everybody wants 10. Everybody wants all 20 market maker model ideas. You don't need all. You just need one model. You wait for a higher swing low after breaking a swing high. Any down day after that, just buy. Just buy. Just buy. And what are you going to aim for? Old swing highs. Here. Here. And these clean highs here. Swing high. Swing high. I just gave you a model, guys. Textbook. Easy buys. There you go. You found the momentum in the marketplace. You've got the confirmation of a higher swing low. You buy after any down close days. Now another model that you can do. After a swing high is broken, you get a higher swing low. The third candle. The third candle. Now everybody is like counting. They start counting candles, and then it's like they don't know how to count. 1, 2, 3, because it's a 3-bar pattern. And if it's the swing low, obviously the second candle is the swing low. If it's a 3-bar pattern, it's the middle one. The second candle is the swing low. So this is the third candle. Wait for the third candle's high to be broken. Where is it at? Wait for this candle's high to be broken. After this candle's high is broken, go long. You have a high probability chance and odds that price is going to go higher after this. This is just me trying to teach people how to get into the marketplace sooner than later. If you want to get into the market quicker, this is one idea. It's a little more riskier, but this is an idea. You wait for the third candle's high to be broken. Boom. Oh, Deontay, the third candle's high was broken. I think I'm going to go long now tomorrow. What am I going to aim for if I'm doing a scalp? If I'm trying to do a high probability scalp, you can milk this too. A lot of people don't realize this is the day you can make money. You know, if you're trying to make that 10 pip run, that quick 30 pip run to this high, you can make money here. People don't realize it. And sometimes it runs even more because you have the momentum on your side. That fourth candle now, because if we're counting, and I don't like to, I'm not sitting here saying, oh, count the candles. But in theory, the fourth day, because let's say, because everybody's going to say, oh, but what if the next candle doesn't break the high and it doesn't break the low? Then you just wait for the candle that breaks the high. Once you get the confirmation of this high being broken without the low being broken, I'd rather the high be broken than the low. Personally, I'd rather the high being broken than the low because I want this formation to continue to swing up. Swing up. That's what I want. I want it to swing up. I don't want it to swing, then drop down, break the swing, and then run up. They can do that, though. The market makers will do that. They'll make this swing point, run it, and then run back up. You're like, ah, dang, they got me. Yeah, they got you. And they got me, too. They got me on that UJ trade the other day. It sucked. And I saw price run back up 20 pips. And we'll talk about that as well towards the end. I said I was only going to go to 9. Just have to text them real quick and tell them. Hold on. Hey, Siri. Alright, cool. At least I'm being responsible and telling them I'll be late. Higher swing low. Because I love this stuff. I'll talk about this all day if I have to. Swing low. 1, 2, 3. Third candle's broken here. High probability buy scenario. That's the high probability scalp model that ICT teaches people. It's a free model. It's not like he put it in mentorship and hid it from people. No, he put it on YouTube. And I went and studied it myself, and I was like, wow, this model is actually really sound in logic. And I studied it on every asset pair. Stocks, commodities, futures, bonds, cryptocurrency, foreign currencies. I watched it all. And I was like, wow, they actually translate in all these models because they're all coded the same. They're all coded the same. It's just the timing that's different. The timing and when the institutions are stepping into the marketplace differ. For example, for cryptocurrencies, for those guys and gals that like to watch cryptocurrencies or trade cryptocurrencies, I personally think that crypto is the last asset class that they touch during a trading day. and I think they touch it towards London close. London close tends to be more volatile for crypto. The New York session, 7 to 10, that classic New York session kill zone that ICT teaches for currencies, I don't think it works for crypto personally as well. Same thing for the London session. I don't think it works so well for crypto. But when I look at it for the London close setup, 10 to 12 or 10 to probably like 3 p.m. bond market close, I think cryptocurrency is more volatile then. But the same fundamentals are following suit. The price action is still following the same way. The algorithm is still programmed the same way. It's keyed off of certain days. It's keyed off of certain cycles. It's the same idea. What do I do here? I buy the next day. That's what I'm looking for, a buy. What happens the next day? That's your high probability buy scalp scenario. Look at how it opens here. Drops below midnight opening price. At one point in time, drops below midnight opening price. Buy. Boom. Profit. Not saying it's guaranteed every time, but the probability and the statistic of it being a profitable trade is more likely on your favor. Now, is it going to suck when it fails? Yes, of course. It's going to suck because you did all the steps. You went through step 1, you went through step 2, you went through step 3, you took the entry, and then it still hit your stop loss. It sucks. But you're going to have to live with that. It's not sitting here saying all the trade models are 100% accurate. No. It might be 85% accurate. And that other 20 and change percent, that may be the day it fails on you. But everything else, high probability. You got that high probability rate here. At this point now, what can I speculate? Probably bullish price action. I could probably continue to look to buy every day. Price keeps doing what? Taking out previous daily highs. Counter trend candle. Now, if you were the trader that took the first model approach after getting this swing low here, right? We take this off, and we take this off, and we take this off here. If you were that first trader that took the model that I recommended, right, or suggested, wait for the higher swing low after a false break or after breaking a swing high, right? Higher swing low. Take this off. Higher swing low here. Just wait for the next down day to buy. Down day, buy, profit. Was that so hard? Did I sit here and tell you go down to the 1 minute time frame, go in the 15-minute time frame, find the breaker structure, find the mitigation block, then wait, then use IPTA, then wait, no, cast forward. No, I didn't tell you all that stuff. I just told you wait for a down day. It sounds very simple, and it almost sounds idiot proof. Because it is. It's a cheap day. If you were to buy stocks, think about it. If you were buying stocks, if you want to buy Apple tomorrow, or Disney, or Microsoft, or Alibaba, or whatever stock you want to buy in the world, whatever investment you want to buy, are you going to buy in the up day? No. Because you want to own a stock at a lower price. You want a dollar cost average at a lower price. You want to bring your cost value down. So you're going to wait for a down day and buy. Doesn't matter. Let's say, just to jump into Apple, because I know the market is trending up right now for the S&P. We could clearly see the market's going up right now, but look at every down day here. Down day, down day, down day, down day, down day, down day. What happens normally after these down days? Buy, 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 buy. I'm not showing you anything that's magic. It's just that nobody's talking about it. I just don't understand why nobody else in the trading community is talking about it. Or at least bringing it to the forefront. You know, all these channels that are, I'm not sitting here saying, I'm some guru, you know, or I'm a professional trader. Yeah, regardless of me being full-time trader or regardless of me being a part-time trader, whatever the case may be, anybody can see what I'm pointing out. But nobody wants to come here on the platform and say, oh, this is such an easy trader approach. Why is nobody telling other traders in the community how to do it? Because they're gatekeeping. And if they're gatekeeping, if they're not gatekeeping, I mean, they either just don't know. And they're making trading complex. I'm not a gatekeeper. I'm going to sit here and tell everybody. I'm going to tell my best friend, you know. I'm going to tell my best pal. I'm going to tell my girlfriend. I'm going to tell my brother. I'm going to tell my sister. I'm going to tell anybody that wants to start trading. I'm going to tell them everything that I do. The exact steps and model. Everything I show you guys in the Telegram channel, it's no lie. I literally do it. And I show it time and time again. Especially with IPTA. That's one of my biggest things I think I really like so far that I got running for myself is the IPTA. I like to show people that idea and that model that I formulated around IPTA and how I use it to comprehend price action. That's it. I've watched several videos of people using IPTA. It made no sense to me. but I had to figure it out for myself. And I was like, this makes more sense. But it's not like I took ICT's words and misconstrued them. A lot of people take his content, and I don't know why they do that. AUD, USD, just to bring it back. Just to bring AUD. Just to bring it back home with that idea of how you're finding bias and how you're now trying to get into the marketplace long. Any of these down days, the next day you buy. You get that higher swing low, and you'll see the market continue its cycle too. Let's keep following this price action. So we get a higher swing low, right? And if this is the turning point in higher swing low and it's going high, what is it aiming for? Swing highs. And I'm literally walking you guys through this. What is this? A swing high formation. Same thing is going to repeat again. Let's play price forward. What happens here? It breaks the swing high. Okay. What do I have to wait for now if I want to go long again? Either a down day, right? Or I wait for a higher swing low to form now. Play price forward. Let's see what happens. Price is playing. Got a down day. Price is playing. What's that? 1, 2, 3. Is that not a higher swing low again? The most natural cycle or natural pattern that I can see in the market every single day. Doesn't matter the time frame that I'm looking at. I could be looking at the daily. I could be looking at the weekly. I could be looking at the monthly. It's all fractal. Obviously, some things take longer depending on the time frame. But looking at it on the daily time frame, you can see the market's turning pretty early and sooner than waiting on the weekly and the monthly chart. Looking at it the daily, you could probably even take this concept and break it down to the 4-hour. Would I go that far to say that? Possibly. You'd have to backtest that. But I know market makers and the algorithm break everything down into fractals. It's all the same thing. There's a consolidation on the hourly chart. There's probably consolidation on the 15 and the 5 minute. There's an expansion on the 1 minute. There's probably an expansion on the weekly. It's always something, tit for tat. And you can see price plays it higher. 1, 2, 3. Third candle's high is broken. And that swing formation here by the next candle here. What are you most likely going to try and aim for? This. Does it mean you're going to guarantee to get this buy and run this high? Maybe, maybe not. But you're taking probable risk. And you do get it. At one point in time, price drops down maybe because it's a daily, so there's a lot more data. But there's probably a point in time where it opens, drops below midnight opening price, runs above the high. You got your buy setup. Shotgun, run through the high. It's not like this one here, where this one ran through the third candle's high here. This one's a little small. But after small range candles, what can you expect? And like I said, it's fractal. After a small range candle, what can you expect? A large candle, guys. Large candle. Nobody else is talking about this. I wonder why. Because they either just don't know it. Large candle. Another down day. And I think now we're getting into April. Large. Small. Right? Small, small, small. What's going to happen in the near future? Sooner or later, if this market is turning down, this is a smash day sell, sooner or later you're going to get a large candle. Obviously not this large, but you're going to get a larger candle than probably the last 3 days or the last 4 days. It's going to exceed the last 3-day ADR or the last 4-day or 5-day ADR. And then the market's probably going to do what? After exceeding that pip range, consolidate, reaccumulate, go back into a small range cycle, and give you tiny candles. Tiny range candles. Right? Look at this large candle here. Look how large this is. Look how large this is. Look how large this is. Large, 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 large. And then what do? They give you one small one like this. But what happens the next day going into this day? Everybody thought that this was going to be another dynamic shotgun day to the upside. And what do the market makers do? They stall it. And then what does everybody sitting behind their computer desk say? Oh, man, the market's messing with me. Oh, man, the market is against me. No, the market's not against you because it doesn't know you. The market doesn't know any of us. Doesn't know any of us. It just knows liquidity and interest rates. That's all it knows. The market is reaccumulating orders. That's what it's doing here. They're trying to get back in longs. They take profit long. They went long here. They made their money. They mainly went long here. And these down close here. They probably most likely brought heavily here. And then you see the results of that. They take profit. They take the profit. What do? They hedge it back. They're buying. 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 Boom. And that's what you're doing every time. Every time. But right now, GU, if it takes out this swing low, that's the same thing I just showed you on the way up. You would formulate that same idea going on here. If price breaks that swing low here, you wait for a lower swing high. And this would just be the false break up here. This would be the false break high. Not most people would catch this, right? You'd have to be really, not saying super advanced, but you would really have to been on your P's and Q's to catch this turning point here. And how could I know the turning point would have been there? Because it took out the 20-day high. And I've shown this year after year, month after month. Price will take out the 20-day high and then just go short for the rest of the month. There's been countless of months I've seen it happen through my experiences of trading and looking at it like that. There's times when the market comes out, takes out the 20-day low, and just runs higher for the rest of the month. I've seen it. And that could be happening right now with price. And now, let's see what Euro is. We'll look at Euro just to show the IPTA and see what's happening. Same thing. Like I said, if AU is going short now because it's breaking down, AU, EU, and GU should be doing the same thing. I'm not going to look at New Zealand dollar versus the US dollar because I don't think it's worth my while. But it's all cousins, sisters, brothers. They all move together. Look at how it takes out the 20-day high, and now it's sitting here. Right? It finally got back down to this candle's low. This is the smash day candle. I would rather prefer to see when price gets down to that low, when it hits the sell limit order, it smash really through it like that. Gives me more confidence. But here, you can see it stalling. Doesn't mean it won't continue to sell off. But I know overall, eventually it's going to give me a large candle because it's small now. Small. We need large candles to come into play in the future. Takes out the 20-day high. Ever since taking out the 20-day high, we've been sitting here. Does that mean it can't go like this and then make that lower swing high and go lower? Yes, it could do that. Or can it do this? Come here. Run it one more time and then go lower. Or take out that 60-day high first and then go lower. Many ways you can play this. But like I said, you're just trying to find the best possible scenario for you to play as a trader. We are not risk takers here. Anybody that's in my channel or anybody that trades or is under the ideology or the concept or study of ICT, and I'm not even going to say SMC because SMC doesn't exist. Everyone, oh, I'm a smart money trader. You're not a smart money trader concept. That doesn't exist. You're just an informed trader. That's what I like to say. You're an informed trader. You're an informed investor. Now, you're not a smart money concept trader. You're an informed trader. You don't trade like the rest of the public. 90% of the traders are failing. You don't want to be those people. We're not those people here. Anybody that comes around me, I want best for you. I want you to be the best trader you could possibly be. You text me, DM me. I'll sit there and answer all your questions. One by one. I get thousands of messages. I'll answer every single one. I may not get back to you that same day. But best believe I saw your message and I'll get back to you. Don't be afraid to DM me, ask me. I'm there. I'm an open book. Use me. Debate with me. I like to argue. I'm not saying that I like to argue with people. I like to debate with people because it gets their mind going. You know? People are sitting there and they're not stimulating their brain. Their neurons are not firing. You're just sitting here, just sitting in front of the chart, just dumbing down. No. Have a conversation with another trader that you may not totally agree with and see where they're coming from. Question them. Question me. I like when people question me. Deontay, why'd you do that? Why'd you catch the sell here? Why'd you buy there? Thank you for asking me that question. So now I can come back and with further context and explain that to you guys. I'm not going to sit here and say, oh, because the RSI moved over the cross and moving average and then the Ikomoku cloud and it broke through resistance. No, I'm not going to. You would never hear me say that to you. And if there is somebody saying that, then you know that's not Deontay. Price breaks that. I would do what? I would wait for this. If I wanted to be confident, I would wait for this swing low to be broken. Wait for higher swing low. Lower swing high, sorry. Wait for this swing low to be broken. Lower swing high forms. But if you want to catch a jump on this, you would sell short here. Any up close candles. If you think this the rest of the month now, from this point going on, because NFP is out the window now. There's no excuses no more. All the noise is out, right? All the confusion is out. Boom. What do you do here now? If you think that the rest of the month is going short, just wait for the up closes and then go short the next day. We'll see how this plays out in hindsight. In hindsight right now, doesn't seem like much. But at the end of the month, when we're going into freaking May, And when we look back, people are going to be like, wow, that concept worked out really well. Yeah, I know. Because I've seen it month after month, time and time again. And I just want you guys to utilize it as well. You don't have to break your brains, you know? You have to spend hours sitting here trying to break down technical analysis, fundamental analysis, macro analysis. You'll get good at that over time. As you become more seasoned, like I said, as you become older, as you become an adult, a grown man, a grown woman, whatever the case may be, right? You know things that you like to do and you know things that you don't like to do. And that's the same thing it comes down to trading. I know what I like and I know what I don't like. People can send me all these different models, not breaking my model, because I know what works for me. I found almost 5 winning models for me. I don't need any more. I could just stick to one, or I could rotate one, or I could use this in this scenario. But I don't need all 5. I found one. The Asian session model. It's that silver bullet, quote unquote, whatever everyone is saying, calling it now, the silver bullet ICT model. It's the same thing I found for Asian session. The no bias model, whatever you want to call it. And that's what's going on here. Let me just check the chat, see if anybody said anything. Got 4 questions. Cool. Yes, smash the candle also breaks. Yes. Breaker or order block. Yes. And that's why I think ICT was influenced. Like I said, all the older mentors or mentors of the communities, you know, the people that are the forefront of Forex that we know, at least now, you know. Not to sit here and say put them on a pedestal, but these people have gone through, done their due diligence, done their research, spent many of their younger years, you know, like my years now. Like they probably like ICT or Wyckoff or Larry Williams. They spent their youthful years studying the market, sacrificing their youthful years trying to understand how the market works. And now they're older, seasonal traders, and now they're what? They're paying it forward. That's why you have 14-year-olds, 15-year-olds knowing concepts that were never out before, and now they're killing the market. And they're doing great. And they found a skill set that can pay them rather than clocking into a job and being slaved away for minimum wage. Or someone putting a cap on how much you can make because they think you're worth X amount. You don't know my worth. I'm worth whatever price tag I want. And you have the ability to do that when you have a skill set to trade. Even if you're trading options, calls, and puts. Same thing here. You use the same analogy, price action, and place your calls and puts in the stock market. Same thing. Unless you're trading the futures and S&P minis and stuff like that, different scenario. But it's the same thing. Use the information that people are passing down to you to help you advance your trading. Don't tell me you've been trading for 3 years and you're still the same trader 3 years ago. What are we doing here? Are we wasting time? Does it look like we have unlimited time on this planet together? No, we do not. So time is money. So let's buckle up, focus up, guys. Because everyone's like, I had another question in the chat in the channel just now as I'm thinking about this. Someone asked me how to trade how do you go about the FTMO or the prop firm accounts and your psychology. Yo, I'm trying to make money. There's no time to play. I got bills to pay. Got a family to feed. I want to live a lavish lifestyle. I'm not sitting here trying to measly. I'm trying to be average. I'm trying to be somebody. And even if I am, I know I'm not saying I'm special. I'm not nobody. Nobody's nobody. Everybody's not that special. But I don't want to live an average life. I want a low key, stress-free life, make money over the phone, and that's it. I'm able to help mom out, little brother out, and get along my day. And everybody is happy. That's it. But what did it take for that to happen? For that to start? Somebody had to put the foot down and say, yo, I'm going to become a trader. Somebody had to put the foot down and say, hey, I want to become an investor. I want to get into real estate. I want to get into stocks. I want to become a business owner. I want to create a new invention. Somebody has to do it in your family bloodline. And I know it sounds like motivation, but it is motivation. I'm not sitting here trading because I think it's fun. No. I could be doing something else. I'm sitting here because I want to make money, guys. That's the end goal for anybody that's trading the market. We're all here trying to make money. And I think most of us can agree we're all trying to escape probably a wage job. Especially if it's a job that's not salary and has no benefits. A lot of people are trying to get away from that. They're trying to be self-sustainable. Depending on another person to pay them, probably not the best idea. Yes, you can work a job, but mind your own business. Don't mind the business that you're working for so much. Unless that's your sole career. Most people that are in the channel, most people that are watching here live, they probably trade Forex. And they probably trade other commodities. Or they trade options. Or whatever the case may be. They're an investor somehow, some shape or form. They're some type of entrepreneur. Right? They are not sitting here wasting their time thinking that they're going to try and advance through the corporate ladder. But that's just my opinion. UCAD. So like I said, if I'm looking at these currency pairs, I'm looking at the cousins, I'm looking at the siblings, I'm looking at everybody. This is UCAD's IPTA right now. We recently did what? We took out the 20-day low. Look how this is Ooh, my bad. This is inverse to what Euro is doing, what GU is doing, and what Aussie is doing. They all took out the 20-day high. You can see here for UCAD, an inverse currency pair, is taking out the 20-day low. That's a good sign. The markets are moving in code. There's no S&T divergent here. There's no high probability reversals playing out here. The overall trend is most likely going to unfold and continue. So we took out this here, and then we ran higher. EU, AU, GU took out the 20-day high. They all took out the 20-day highs, and they're going lower. And now this is pulling back up. DXY took out the 20-day low, and it's going higher. That's what we're seeing here. What do we have here? This largest PD array. The most obvious thing that I can see here in price. I'll make this different colors. It's a little hard to see. Oh, terrible, Deontay. What? Okay, that's better. What is this? Last green candle to the next up close candle, green candle. Liquidity void here. Here to here. We had a sell-off. We had a sell-off of 1, 2, 3, 1, 2, 3, 4, 5, 6 days. If I'm counting correct, 6 days, right, of it selling. 3 and 3. Selling right off. And you can even see signs of a smash day candle here. For those that have a good eye, that's a smash day candle. Why is this a smash day candle? Look at the close. It closes above the last 3 to 8 candles. Closes above this high, closes above this high, this one, this one. So it closes above 4 daily highs. Price gets back down to its low. Look how quick they run price through that low. That's that Larry Williams smash day setup. Another example for that person that had a question here. Look at them selling it, and ever since then, it sells off. That's the turning point. Turning point. See that? That's the turning point. They turned the market with that smash day candle. And I was saying before, I think that's where the ICT got the idea of a order block theory. Price leaving an area with speed. That's the smash day candle. This candle here is the order block theory. But ICT would have to watch my video to even confirm that's where he got it from. And I would probably doubt he would even say that he got it from that. But that's neither here or there. We have price pulling up now. Now, if this is going to fill in this liquidity void, here to here, we'll just leave it as a line now. And we'll put an arrow for the top of it so we can see where the stop of it. If that's the liquidity void there, and price is going to make it, if price is going to theoretically make its way up here now, right? Running back into an old 40-day high. So there's a lot of blending that goes on here. There's an old 40-day high here that it could run back to. Price likes to run back to what? Old highs. And it's not like I'm taking a random high. I'm taking a specific high in time from the start of April 3rd. This 40-day look back high. Price could run back into it and then go short off of it. Or price could just keep coming back up into what? The bearish order block. The last up close to the drop. But overall, I can speculate that price is most likely going higher. If price is going to go higher, all I have to do now here is wait for a down day, go long the next day. Down day, go long the next day. Down day, go long the next day. Or wait for a higher swing low formation to form. That means price would have to pull back, break out. It would break a previous daily low, because if it's making a swing low formation, it's breaking the previous daily low, making a low point, and then the next candle runs back, taking out the swing low's high, and then it runs higher. And then it goes up. You can see how this is the swing high here for the smash day setup too. It takes out the previous daily high here. Then the next candle does not take out the high. It runs the low instead. And it continues selling off. And that's what I would play out here, going here for UCAD. I would speculate price to keep going higher. If dollar taking out this 20-day low here, and not wanting to get down to the 60-day low, right? Because what is this candle here? We haven't been to this candle in a while. What are these two down close candles? Mainly concerned with the larger one because it's a bigger body, beefier body. But what is this candle in theory? A bullish order block. We haven't been there in a couple weeks, right? That's a scenario, right? It's all about perspective. Because I could sit here and mark this chart up for a sell scenario. I could sit up here and mark this chart for a bear scenario. But I have to take a stance at one point in time. I can't keep playing, oh, I'm a buyer. Oh, I'm a bearish. I'm a seller. I need to pick a stance. And I need a filter to tell me, now you're a seller. Now you're a buyer. People don't have that, though, in their model. They don't have something definitive to tell them, yo J, yo D, yo, I'm about to sell. Yo, I'm about to buy. They don't have that. They're kind of iffy. I think I'm kind of going to buy. What do you mean? You kind of. What do you mean kind of? This is not a joke. You know, this is a real game. Especially if you're using live funds here. You're taking money from where you're working. You're trading your life away, working at this corporate job or this labor backbreaking job, then to come here and play around in the market and waste the money and waste your time. Come on, guys. What are we actually doing here? If price gets back above this swing high here, then odds are I would for surely think that we're still bullish. Then we're going bullish now. This still here, the fact that we broke this swing low, I would like to see if price is going to confirm a lower swing high. So this breaking here, still telling me bearish ideas, right? But it's not, what is going on here? It's not following suit with what AU is doing, right? It's actually following suit with AU. AU is dropping. You have to put it side by side so now we can see what it looks like. It's daily chart? No, it's monthly. Put it side by side so we could really look at this. What did AU do recently? Break a swing low. What did DXY recently do? Break a swing low. But after breaking this swing low, did DXY break a swing high? No. We're not there yet. We're not there yet. Look at the swing high all the way up here. Look at how AU is already at its swing low after breaking the swing high. We're not there yet. So I would wait. I would need confirmation. I would still need something to show myself here in the DXY. Some things will maybe give me an advantage, and I may have the head jump on other things. Sometimes I don't. I'm not sitting here saying, Deontay gets the market right every single month using IPTA. No, because if you go through my trading view and you go through countless of years, 2020, 2021, 2022, there are months where IPTA really doesn't give me any real insight to what the market is doing. And you guys are going to see it one day. And you're going to be like, Deontay, what's going on here? And I'll be like, yeah, this is just the way it goes as a trader. Not everything is going to be cookie cutter like and down to every detail. Not going to be perfect. But here, price takes out a swing low. AU's taking out a swing low. I need dollar to take out highs. If AU is going to keep going down, I need dollar to get up. Has to, because it's inversely correlated. If not, we got an SMT diversion on our hand. They're holding, right? This is just a false break. They run the swing low probably, push AU back up. Dollar is just stalling, right? Breaker, right? We failed to make a higher swing high. We're failing to make a high. We're running into a breaker, bearish order block. Price is going to go down and keep going lower to take out the 60-day low here. And I just want to make sure I answered everyone's questions. So I'm just going to check the chat. Got 9 people. Appreciate you guys. Is there a long-term? Is that the long? Short? Yes, the book. Yeah, absolutely. If you want that, Tommy, just text me or send me. Or you can tell anybody in the channel. I honestly give it to you. The PDF is in there. I'm not going to sit here and sugarcoat that. I don't have the book, Larry Williams' book in the channel. I literally do. The whole PDF, the full book is in the channel. If you want that, I physically have the hardcover book because I'm a bookworm. I want the book in my hand. I'd rather that. The questions, though. I'm going to get down to the Q&As. If you have any questions, guys, please shout them out. All right, let's go to the top. How swing highs and swing lows can determine my bias for the day. I answer that all throughout this video. So hopefully, Muhammad, that answers your question. Invalidation points for a trade setup. Oh, that's a perfect time. You said this AD. This is your question, AD, just to answer it. So, one thing I would tell you, rule of thumb: if you're trading out of a trading session, you're chasing price. If you're trading outside of London, if you're trading outside of New York, and if you're trading outside of London close, if you're trading outside of Asian, you're chasing price. Simple. Those are invalid setups. If you're trading late PM sessions, if you're trading at least foreign currency, because I think you trade foreign currency AD. If you're trading foreign currency and you're trading anywhere from 12 p.m. to 8 p.m., all invalid. I don't care what setup you're showing me. It's not high probability. Question: how to detect trend by swing high, swing? I answered it all day. A question: draw IPTA through weekly cycle. I'm not sure what nobody meant. This nobody in the channel meant by the second question, but if anything, just shoot me a text and I'll get back to that because I'm not sure. But I showed how to show trend with swing highs and swing lows throughout this whole video today. I showed an example. Yep, I explained that. Also want to say shout out to everybody that's here watching this live. And shout out to everybody that's going to be watching this on YouTube when it's posted in a few hours. I really appreciate the support. Just here to bring knowledge to the Forex community. Yeah, something I really love to do, man. I'm going to teach. I want to teach this in a classroom one day. That's like a biggest goal for me. Teach students, like high school students or something like that. One day. Bigger goals, though. What frames the next weekly candle if going up or down? That's a great question. Said this. It's a great question. All right, jump right into it. And I'm going to check the chat for the... Let me just pull out another... No, weekly range. Pull out another template. It's a great question. The weekly draw. Same thing with the daily bias. Just you're looking at it on a higher time frame. Let's just take the DXY. Let's keep it simple. Dollar. This is the weekly range. No, I don't want this because this is valuable information. We'll open it on this. Yes. Got 6 chats. Okay, I'm going to get to that. Appreciate you guys. Those people are going to be mad that I'm not there yet. Oh, man. All right, cool. Let me delete this. Boom. You come to the weekly chart, right? You come straight to the weekly chart, and you're sitting here telling yourself, how do I know if next week is going to go up or go down? 2 ways to go about it. Like I said, swing highs, swing lows are normally the controllers of the marketplace, right? The top bun or the bottom bun. You're either making a top with a swing low, or you're making a turning point with a swing low. A swing high, or you're either making a bottom bun or a turning point bottom with a swing low. That's just how it always goes. You can see it especially on the higher time frame. You could see these swing highs and swing lows everywhere. Everywhere. You can almost project price for a long-term trending model. And it's very more rewarding this way. When you look at it from the higher, that's why I said everyone's, why do you look at the higher time frame? Because it's the higher time frame trend. It's telling you where price is going to be in the next week, 2 weeks. Why look at the monthly chart? Because I have 20/20 vision almost where the market is going to be in the next 3 months. I could take a very informed, educated guess where a dollar may be in the next 2 months, 3 months. Sometimes it's not apparent, but sometimes it's very obvious. What happens here on the weekly chart? Because we need to use data. We need to look at something to give us some idea or context of what's going on. We recently can see, right? If I were to look at the chart and just do my voicing of looking at this chart in the weekly chart, wow, price just keeps breaking previous daily lows. Wow, that's something I would really just keep looking out for. Price keeps breaking previous daily lows. Low, low, low. We're going to tear off. So 1, 2, 3, 4. 4 weeks down. Looks like we have a up week. What does my mind think about this when I'm going down? We have an up week out of all these days? Is this possibly a counter trend candle? Yes. That is the one thing that pops into my head instantly. What are we drawing to? It has to be some type of swing low or swing high that we're drawing to. So if we're going down, it has to be some type of swing low. What's this? There's a swing low here. Daily. Here. Excuse me. Sorry. There's a swing low here. So if this is going down, this could be an objective for the algorithm to draw for. Because there's what? Sell side liquidity below this low. Always saying everything backwards. Sell side liquidity here. If price is going to continue going lower, at this point, what am I going to look at? I'm going to look at the previous weekly high and the previous weekly low. The next candle that opens, it would technically be this one because this candle's closed. Sorry. Here and here. And it's a small one too. So odds are, if it's going to go short, I would want to see the high ran and then price continue to go lower. That's what I would speculate here. I would also, just to bring it back home to the swing highs and swing lows, what did it do here? Broke a swing low. But even to take it a further step, what happened prior to this swing low being broken? It broke a swing high. But after breaking this swing high, did we get a higher swing low formation? No. So then we know this. We can clearly see it's a false break that they just threw retail traders. This is a false break. Why are we not getting a higher swing low after breaking a swing high? Why are we breaking a swing low after breaking a swing high? That shouldn't be so. Unless it is a double fake out. Price takes the high, takes this low, then runs higher. Which I don't think would be ideal here. But if price is going to come up and come back down, odds are this was fake. They just want to grab the money above these swing highs. This swing high here. Or trade back into some type of up close candle. Right? Some bearish order block theory. Where does it trade up into? This up close candle here. So if we're taking the whole range, right? In theory, price trading up into it should respect it in quote unquote retail resistance. The last up close candle that price trades away from, trades back into it, comes down. But if we were looking at it from swing highs and swing lows, breaks this, false break, comes back down here. We know it's a false break after it breaks a swing low. We don't know it's a false break truly yet when we're here. We think it's still probably bullish momentum coming into the marketplace. And we want to see a higher swing low form. But instead we get a break of a swing low. So we're like, oh, so this is a false break. Odds are we're probably still going to go lower for DXY at this point. Now, I would speculate if I get any up weeks, I can go short. If I get any up days, I can go short. I can either break a swing high and swing low, try to find some optimal trade entry. I can try and sell on a Tuesday or Wednesday, because if it's going to go lower, each week it's probably going to form the high of the week, normally on Monday, Tuesday, Wednesday, and most ideally Tuesday and Wednesday. There you go. Simple logic. I didn't have to overthink the process. If I know Tuesdays and Wednesdays are going to be the high of the week, why not just trade on Tuesdays and Wednesdays and wait for price to be above Sunday's opening price, go short in New York, go short in London. There you go. And then hold. And then if I know that from that context of the higher time frame weekly, I'm already 3, 5, 10 steps ahead of retail traders or where they think price is going to go. Because if I go here, if I type in trading view, no, this trading view, and this is what I like to do. I like to use the forms or any forms. It could be baby pips. It could be your local commercialized retail channel that you follow on Discord or something, and they have a lot of retail traders in it. Not to pick at them, but they're the counterparty. I would come here. I'll go to ideas. I'll type in, let's say, DXY. Right? Come here. Look at the ideas. I'll look at the trading view, the most popular ones, right? Or the most trending one, or the newest one. Normally I go popular because I want to see what the trading view algorithm is doing, because it's almost like a social media platform. They're pushing out the content that is most likely being seen or has a lot of higher click rates. You know, it's like YouTube or like Instagram and stuff like that, or Reels and stuff. They're gonna push the content that they mainly want you to see that has higher likes. Look at this, 447. DXY, the golden elephant. If this is not retail trader at its prime, not to pick at whoever this trader is, not picking on them, but this is a retail trader. Unless he's trolling. The golden elephant in the room. Look at this. He's using trend lines. Trend lines don't mean nothing. And no, they don't. He has. I'm not going to read it, but I'm looking for the people that have a stance that put long or short. Look at this. Harmonic patterns. Look at this. No. Short. And I'm trying to gauge how many retail traders are saying short. How many retail traders are showing long. And I'm trying to look at them and see, oh, is this truly what they think price is going to do? Look at this. Support and resistance. We could go through this all day. And you're getting free advertisement on my channel, unfortunately. Pro Signals FX. Probably got a Discord making people pay for signals, right? Not teaching people how to trade. Like I said, if you're gonna trade, indicators are detrimental, and taking signals are detrimental because you're lazy. You're letting another person do the work for you. You don't know if this person is gonna perform great results for you. And you can see clearly, I would not take signals from this person. Not to pick on them. I'm not here to pick on nobody. But I'm using them as bias. I want to see what the retail is thinking. And then I'm going back as an informed trader. Okay, what would I use as counterparty to if somebody's going short? What would I use as counterparty if somebody was going long? And then I would find a setup that way. And that's how I would base my bias on the weekly chart. It doesn't change. The same thing. And I'm just going to get to the chat. Let's answer some questions if somebody has. Yes. Will there be a link to download the recording? Yes. It's going to be on YouTube. Will you be able to share? Yes, I will be able to share. And thoughts on yen pairs? Yen pairs? Great question. Prioritize. So, simple. First things first, I'll go straight to the rates. What do I always say? Bank of Japan, negative rates since 2016. Negative rates, not too good for the currency. Compared to the other rates, so like if you're looking at AJ, you'll take Australia, 3.6 to a negative rate. Clearly, Australian dollar has a higher rate than Japanese yen. Same thing, CAD yen has a higher. Dollar yen has a higher. Let's see, New Zealand yen higher. Anything that are the majors. British pound yen higher. So overall, I would think and suspect long term, without even looking at a chart, that the yen is getting smoked. Nobody wants Japanese yen right now. Nobody wants Japanese yen. If you were to look at it, look at this. Just looking at the chart overall, just looking at it, look, it just broke a swing high. So what is that? Bullish momentum, right? Taking that context clues. Okay, we just broke a swing high. Now, people are going to sit here and say, oh, the body. The body didn't break the swing high. I don't care if the body didn't break the swing high. And you can even go through ICC's content, and I could even quote and source it for you, because I'll go through it and send the video. There are moments in time where he says, oh, the body closing above the high doesn't really mean much. And I've noticed that too, trading throughout my experiences of trading. Just because the body didn't close up here doesn't mean it's not going to go up here. Especially after if it took out previous weekly lows and now it's going up, then it's going to keep going. This is just a small range candle, large range, small, large. Then it runs up, takes out this high. It gave up all its gains. And in theory as well, if you read the book, this is a Larry Williams hidden smash day candle. Because it closes all the way off from its high and it still closes up. It closes in the lower percentile of its candle's range, high to low. And it has an up close still. So the next candle, if it gets up here, long term, Larry Williams is he's a long term trader. He trades on higher time frames. Here, you buy here, long, hold long, hefty stop loss, of course. If you're trading on higher time frames, you best believe you have to have an equity of a certain amount to want to have feasible trades, to see substantial profit at least long term or quicker returns, ROI. If you have a smaller account, you're going to risk smaller and the ROI is going to be a lot slower, which is okay. It's a marathon. You could compound the account. But the larger accounts are most likely going to see the rewards better because they have the larger funds to see that. Swing high broken, I would wait for what? A higher swing low to form. You can already see it's happening in price action. For that person that asked, I just want to be polite. Yeah. Yeah, facts. They asked about the yen. Swing low, broken, and swing low, broken. Swing low formed here. What do we get next? We can see that clearly the market makers are buying it back because we get a higher one. We get a higher swing low. And what happens again? We get another higher swing low here. And now we broke a swing high. So you got even more conviction or confidence to probably say we need a higher swing low on the weekly chart to go higher. Or you can still be looking to be a buyer moving forward. If you're aggressive and you don't want that confirmation at this point, you can look to be a buyer next week, the following week, and the next week. But do know in due time, the market's going to pull back on you eventually. You're going to run into a week where it's down. You're going to run into a black down weekly candle. And it's not going to be any surprise because you can see how this market's going up. You have one black one, another one, another one. You have 3 weeks down. So you may be faced with that moving on. And that's how I would speculate the yen pairs right now. Even like CAD yen. Like I don't trade CAD yen, like not at all. We just broke a swing low, smashed a candle. You look how it runs up. Once again, shout out to Larry Williams. Smashed a candle. What does this candle do? It takes out. This is a textbook Larry Williams smashed a candle. A lot of profit here at this buy here. This close, the close of this weekly candle is below 1, 2, 3, 4, 5, 6, 7. 7 weekly lows. That for most chartists and most retail traders looks bearish. And that's when they get everybody. When it looks super bearish and everybody thinks dollar's going to drop, CAD yen's going to drop, the S&P 500 is going to drop, that's when they pull it back on everybody. They pull the veil. It's like a rug sweep. They pull the rug underneath your feet, and then what happens? They push it all the way up. One strong week up. Nobody probably was expecting this, unless you're an informed trader. You saw this as a sell stop raid. Boom. Now you're thinking, oh, higher prices. Plus you got the close below here. So if price were at any point to get back to this candle's high, that's where you're buying here. This is the textbook Larry Williams buy. You're buying on strength here. What happens the next week? Nobody's prepared for this strong weekly candle up. Everybody's caught off guard. Everybody that was saying CAD yen was going short because of this, they were totally wrong. False break. That's not to say they couldn't have been right. Because they could have been totally right, and it could have been another weekly candle down. But sooner or later, if the market was going to turn around, it was going to give you a smash day candle, and it's going to fly back up. Sooner or later. And just for another reference, let's do something funky like Swiss yen. I don't even look at Swiss yen. Looks bullish to me. Yeah, looks bullish to me. That's a swing low here. This is a higher swing low here in itself. We just ran this one. Could have been a false break to go lower. We're looking to get back to a swing high. So if it gets back to this swing high, then I know that this was just most likely a false break, and I could look to go long. And this is a turning point here. Swing low. Third candle here, high is broken. Next week, go long. That's what I would say. I'm not telling you, hey, you should do this, but this is my opinion on what the yen pairs are based off of the macros. See how easily I quickly came to an analogy or came to a stance by just using the macros and using the interest rates? Because yen is less favorable. They're the only central bank in the world right now with negative rates. They're not competitive. They're the least competitive central bank right now out of all the central banks. Does that mean the central banks like Denmark, Indonesia, India, Poland, Norway, Saudi Arabia, South Africa, Sweden, Switzerland, Turkey, does that mean that they're going to have strong currencies? That's not necessarily true because it goes a further step than that. But from a quick, dirty approach looking at this, you're looking for an interest rate differential. You're taking the two pairs. You're trying to find that. You pair a weak and strong pair together. and then you run from there, and then you align it with price action, and then you move forward. Long term, these pairs will move following its trend. That would suggest dollar will make a comeback. Because everyone in the news, fear mongering everybody. Dollar's going to collapse. Dollar's going to collapse. Dollar's going to collapse. Yes, we know it is going to happen in one day. It may be when I'm an old man, when I'm old and gray, right? And I'm on my deathbed. Maybe that's when dollar's going to collapse. Who knows? But as of right now, the feds are doing everything possible to hold up the dollar. And I know the feds wouldn't let the dollar go. They wouldn't let it slip. America wants power. They want to be on top, And yes, the BRIC nations, I could get into all that other conversation, but I don't think that's a conversation for this. But yes, I think the dollar eventually will come back strong against all the currencies. Yes, there are going to be periods and times where it's weaker than the foreign currencies, but I think overall, long-term, dollar is going to reign to get above. Other countries are going to find many ways to try and de-dollarize, but I don't think they're going to be highly successful yet. They will be one day. I'm not doubting them. They will be one day, but I don't think that day is coming anytime soon. Right now, at least. Especially with the central bank digital currencies. Another conversation. But, yeah, that's my stance on the yen pairs, my friend. Soybeans. Why don't you trade CAD yen? I don't look at the yen pairs, really. I trade the majors. Anything crossed with the dollar, I'm trading that. And most likely spread is probably going to be larger for this. UJ's going to have a much smaller spread on my broker and my funded account than Swiss yen. I already know that. Soybeans? Yo. Soybeans. All right, this is the last one. I'm gonna go through the question. This is the last request for the chart, but soybeans, this is a good one. I respect this one. This is I like that you're engaging. You want to look at soybeans. Contract soybeans. Swing low broken. 1, 2, 3. Swing high. Lower swing high. Volume imbalance here. Alright, instantly went here. You just touched that. Repriced it. Refilled that. Weekly chart. See the daily real quick. Right now it looks bearish to me. Small. Never trade soybeans. Swing high broken. I would wait to see if a higher swing low forms. If the next candle opens, look to go long. The third candle's high broke, look to go long. Probably back into this volume imbalance. And these equal. Those highs are clean. Yeah, these highs are too clean. Looking at it now. I'll take out the volume imbalance. These highs up here. Not like I'm not in retail. I'm not drawing a resistance zone. It's money above these highs. If I was the market maker, I want this. I want these highs here. Because there's somebody making profit on the way down. We've made a strong, violent turn back around to get up here. And I would like to see a higher swing low form. And then we get up here. And after that, then you could probably suspect maybe reversal at that point. Same way GU. It almost looks like GU. Like, if I were to put this side by side with what GU did, just to show you an example. Tommy. Shout out to Tommy for this one. As you can see, the markets move all the same. Doesn't matter what you're looking at. Go on the daily chart. And remove everything here. Look at those clean highs. Look at how it sharply turned around after taking out a low here. Zoom this out. Looks almost exactly the same. Cleaned out all these lows, sell side liquidity. Got to a certain point where all its orders were booked and everything was filled for the market makers to say, yep, time to run it back up. They run it back up with speed too. You can tell they want this market up. Because look at the tear off. Large, small. Large, small. Now counter trends. Counter trend candle here. But you could tell the market makers said, yo, too cheap for everybody. Too cheap for me, at least, as the market maker. I'm buying it back. They brought it back up here. Now they probably could continue pushing this momentum or this trend to this clean high here. The same way they did here with GU. Look at the large candles. After they took out these clean lows here, boom, that's when they took out that 40-day look back low in March. Yep, if I remember. They took it out there, and ever since they took it out, look how fast, look how large the candles are. It looks just like this, Tommy. Large, large, large. They clearly have an objective. They want this price to go somewhere. I don't need an indicator to tell me that. The nature, the formation, and the body of the candle is telling me somebody in the marketplace definitely doesn't want GU down here. Somebody in the marketplace does not want soybeans down here. They want that thing higher. And odds are it's going to get to those highs, those clean highs up here, where it is buy side. Same thing here, how GU got there eventually. And now that's where we are in price. Which I said, oh, if we get here in price, then we can start talking reversal. You know, then that idea can start. Then we can look for SMTs and see what's going on. Then we can talk about reversals until we get here. But then we finally got there. And soybeans is probably going to get there too eventually. So hopefully that was my insight. Hopefully that was insightful to you, Tommy. Any other questions? Appreciate you guys for still being here and listening to me. I'm being every Friday. Like this is all my life is going to consist of. Is there any regular anchor? I know I answered that already. Do you trade the New York session? How much you? I said exactly how to trade the New York session throughout that video. So hopefully I answered that question. And oh yeah, that's it. Yeah, answered most questions in the Telegram channel. Nice, perfect. And now we're just gonna see chat. Yep, targets are all up there. Yep, correct, my man. 100%. I agree. No problem, guys. Yeah, I'm definitely running late to where I gotta go, but like I said, it's my pleasure. Hopefully this makes sense. Enjoy the weekend, my fellow traders. I will see you again here, 8 p.m. New York Eastern Standard Time every Friday. If I ever miss one, it's just because I'm probably sick or something. But thank you for supporting me. Thank you for allowing me to show you something from a different perspective. And if you already know these things, thank you for joining and just being here as a facilitator and supporting me. I really appreciate that, guys. All in all, see you guys next week. We start work on Monday. So relax, 2 days off, and we're back to work again. So a lot more charts coming your way in the Telegram channel. Normally the first week, I'm normally just not really replying or sending charts. But moving forward now, we will see a lot more charts coming from Deontay. So hopefully this was insightful. It's your boy Deontay signing out with Forensic Forex. Peace.